Good evening. Thanks very much for joining us. I'm Shireen Bhan and the share of greetings to all our viewers this evening. But let's go straight to the top story. Bears did win the week hands down as the Indian markets extended their losses. Let's start with the Sensex. The Sensex today down by about 500 points and the Nifty also closing at 10,300. That seeing a 150-point drop. The index was dragged by heavyweights today, whether it was Reliance Industries, HDFC or Infosys, all deep in the red. The mid-cap index also closed with cuts of more than 1.5%. That was the story for today. Let's talk about the picture for the week. The Sensex for the week has lost 1.2%. The Nifty and the mid-cap index were down by about 1.6% each. However, if you take a break from the action on Dalal Street onto the action on Mint Street, a slightly different picture emerging there today. The rupee strengthened against the dollar, closing at 73.32 versus Wednesday's close of 73.60. This is the rupee's highest level against the greenback since the 1st of October. So that was the story for today. For the week, the Indian currency is up 0.3% today, closing at 73.32, so the rupee stronger. Now, in a bid to arrest the sell-off in NBFCs, the Reserve Bank has moved to boost liquidity further. Banks have been incentivized to lend to NBFCs, and the clarification that's finally come in is that this is not applicable to housing finance companies. The Reserve Bank basically today has relaxed liquidity coverage ratios. In a notification, it said that it has raised the single borrower exposure limit for NBFCs, which do not come under finance infrastructure, from 10% to 15%, and this is effective till the 31st of December, so that's the window. However, despite this move, shares of housing finance companies have fallen sharply in trade as the single borrower limit has been raised only for NBFCs. Lata joins us now to help us understand this better. So Lata, all housing finance companies deep in the red today. And, you know, this was the question that you had posed to Keki Mistry this morning on whether this relaxation applies to housing finance companies or not. And it's now clear that it doesn't.
I'll first explain the complicated good news because of the way in which the rules are structured. Now, under RBI rules, 20% of a bank's deposits should be invested in government securities. A further 8 to 9% have to be invested in what they call high-quality government bonds. Bonds that can be easily sold, you know, like 10-year paper. Whereas in the SLR, you can even have state bonds and things which are not very liquid. A part of the bonds that you hold as SLR can be counted for LCR, that is high-quality liquid bonds as well. What RBI has said today is that if you incrementally lend to NBFCs and HFCs, to the extent you lend, that amount of government bonds, even if they are not very liquid, they will be counted as high-quality liquid assets for LCR. So for banks that are dying to get high-quality bonds and therefore have to take money away from lending to the private sector, this is a boon. But, you know, it's not, it looks like it's not a great deal. Now, I just want to say the other rule that RBI came with is that single borrower limit, you know, there's a limit to which any bank can lend to one single borrower. For an NBFC, non-infra NBFC, it has been raised from 10 to 15%. Now, the impact of this is that, first of all, since it's non-infra NBFCs, it's the likes of HDFC and, or more importantly, L&T Finance, Chola, etc., which are advantaged. If at all banks want to increase lending, they are very likely to look at the asset quality. And therefore, a company, a housing finance company like HDFC could be advantaged. Now, Credit Suisse has made a calculation that banks have actually raised their lending to NBFCs by 40% year on year from last August to this August. I further looked at the numbers. Actually, this 40% growth had come earlier itself, you know, by April. From April to August, actually, they have not lent additional money. So it appears that banks are already of the impression that they are overexposed to NBFCs. Now, we spoke to several bankers, and they are very clear that, yes, we will use the rule, but we will do, you know, we will do a great deal of due diligence on the quality of assets we pick up. Now, the last point that I want to say is that the RBI has raised the single borrower limit for NBFCs. It has not included HFCs over there. That has also raised eyebrows. Is RBI worried about the asset quality of HFCs, which is why it has not included them in the single borrower limit? That also is working against the housing finance company stocks.
All right, Lata, thanks very much for explaining what this really means, where the relaxation will apply and how significant it will be. But as we pointed out, housing finance companies deep in the red in trade today. The Reserve Bank has opposed a proposal from an interministerial panel to create a separate regulator for the payments industry. Now, the central bank has issued a 4-page dissent note explaining why it is opposed to the proposed amendments to the Payments and Settlement Systems Act. The government panel, which was a DA, the Economic Affairs Secretary-headed panel, had proposed the creation of a separate regulator for payment systems across the country. It also proposed replacing the Reserve Bank governor as the chairperson with a person appointed by the government in consultation with the RBI. Now, let's take a look at what the Reserve Bank says in its dissent note. It argues that the Payment Regulator Board must remain with the central bank and it must remain under the Reserve Bank governor, as that is not in conformity with what the government had proposed when it moved this proposal in the finance bill. It also mentions that since the Reserve Bank regulates all other banks, a holistic regulation only makes the system more effective. Here's the former executive director at the Reserve Bank, G. Padmanabhan, defending the central bank's stance, saying that it is absolutely right for the central bank to insist that the payment regulatory system remains under the purview of the Reserve Bank with the central bank governor as the chairman, and saying, why do you want to fix something that's not broken? This is a system that's working. Why try and fix it?
Bank stand, it's a signal saying that we are ready to stand by in case there is a problem, and what is perhaps a limited issue, let's not blow it out of proportions. So the backstop is here. What this could achieve is that maybe the banks could be more forgiving than the capital markets. So probably that would make sure that the liquidity situation stabilizes a little more, because if it's a question of a complete stoppage of your rollover possibilities, then what is a limited problem could burgeon into a much bigger issue. That's what the central bank is trying to address.
Well, that's G. Padmanabhan saying that he agrees with the position that's been taken by the central bank. To discuss this further, we're now joined by NS Napinai. Napinai, I appreciate you joining us here on CNBC TV 18. A 4-page dissent note being put out by the Reserve Bank. And essentially, let me summarize for you what the Reserve Bank says by quoting the central bank. It says, while the RBI does welcome changes and is not totally against a new payment bill, if indeed one is required, it has to be, however, recognized that the changes should not result in existing foundations being shaken and the potential creation of disturbances in an otherwise well-functioning and internationally acclaimed structure as far as India is concerned. So the Reserve Bank pretty much echoing what we just heard there from Mr. Padmanabhan, that if something is not broken, what are you trying to fix by doing this?
Yeah, so the Reserve Bank is not way off the mark in saying that the existing system should not be disturbed. And the proposed bill that has been put forth for public consultation clearly dilutes the RBI's position today as a regulator. In effect, the public regulatory board will make the RBI into an advisory capacity rather than a regulator. But then, having said that, let's look at the legalities. Legally, the sovereign right of deciding on monetary issues, whether it is issuing money or regulating it, lies with the central government. It is through the central government and its enactment under the RBI Act that RBI got its powers. Similarly, the Payment and Systems Act is also a statutory enactment which was passed, and the bill that is now being proposed also has to pass the test of parliamentary review. Is there any impediment legally or constitutionally in a government trying to reprise its role, its sovereign role? Possibly not. But is it doing something contrary to what has happened since 1934? Definitely yes. So how far that modification is going to impact the survival of the bill, and to what extent can RBI's rights be diluted at this juncture, and especially as they have correctly pointed out in their dissent, when there is no cause for the same. That's where I think there is probably a flaw in the proposed bill.
Yes. Okay, so let's just look at some of the arguments that the Reserve Bank has put forward in its dissenting note. It says that there are certain payment systems like cards which are issued by banks globally, and hence dual regulation over such instruments will not be desirable. It also says settlement systems are finally posted in the book of accounts with banks, with the Reserve Bank attaining settlement finality. Regulating these entities goes hand in hand with the settlement function. So if we're regulating banks, then payments and banks should go hand in hand, and hence you have one holistic regulator.
Precisely, because you're also on one hand stating that you should not have, you're also saying on one hand that you should not have a cash system. You want you want everything to go plastics. You want everything to go digital. So on the other hand, you want to take away digital payments out of the regulator's hands. And the reply to the RBI dissent note from the committee also goes on to say that it is not like the RBI is completely ousted from its jurisdiction. It is just that it is entitled to give its inputs to the board. But it will not have a veto. It will not have the governor presiding over the board. So therefore, then, in effect, what you're saying is that you will hold the baby, you're responsible for the baby, but we will decide how the baby will function. You can't take away the right to regulate and, and de-link it from the responsibility or the consequences.
I'll end by asking you about one of the other specific recommendations that the Economic Affairs Secretary-headed panel has made on designating the Securities Appellate Tribunal for grievance redressal. Now, the Reserve Bank says that security markets are not under the purview of the Payment Systems Bill, and so why should SAT be addressing grievances?
Again, one more reason why RBI's dissent is probably well-founded, because not only is their right to regulate, to monitor and to assess what next in the digital payment system processes is being taken away, but if there is a difficulty, there is a problem, the decisions on that also then gets hived off. So the effect of this is likely to be that RBI may be reduced to a paper tiger when it comes to regulating banks or any other payment system, and its voice in terms of being able to ensure what is to be done or what is not to be done is limited to being an advisor to the board. That's like changing something we have lived with since 1934. It's a definite disruption.
Well, it is a definite disruption. We'll have to see whether this goes through or not, but a 4-page dissent note being put forward by the central bank. As I pointed out, this seems to be the latest flashpoint between North Bloc and the Reserve Bank. Nabin, I appreciate you joining us here. Thanks very much for your time this evening. The other big story that we're tracking tonight, the race for debt-ridden Essar Steel is in the last lap, and sources tell us it's a dead heat between ArcelorMittal and Essar Steel. The lenders' meeting is still underway, and Ritu Singh joins us now with the details. Ritu, a dead heat, as we pointed out. Who's offering how much, and how soon can we expect the highest bidder to be announced?
Well, it's a very slow trek to the top, and let me tell you, there are many surprising twists and turns on the way. It's been almost a year since Vedanta and ArcelorMittal, who are the two players left in the fray now, submitted their expressions of interest first, and we're still to hear the final resolution. But yes, today in the meeting that was held, which is still ongoing, in fact, New Metal was out of the race after it failed to clear dues, but Arcelor, we understand, is neck to neck with what Vedanta has offered. In fact, the difference in the upfront repayment between the two offers is merely 11 crore rupees. So the offer made by ArcelorMittal, it's on your screens now, it's 35,000 crore rupees upfront repayment plus another 8,000 crores as capital infusion into the company. Now compare this with Vedanta's offer, which is just 11 crore rupees higher when it comes to the upfront payment at 35,011 crores, plus another 1,000 crores that they've offered to repay in the next 3 years, plus another 5,000 crores that they have offered as capital infusion infusion into the company. Now, this is where the offers stand. We understand that currently both the players are in a heated discussion with the lenders as we speak. But, you know, the COC is hopeful that by the end of the night, they will be able to declare H1 or the highest bidder. And next week is when they'll put the resolution plans to vote, because they are running with a very tight deadline this time around. If in the next 8 weeks they're unable to find a resolution plan, Essar Steel, with claims of over 49,000 crore rupees, will head into liquidation.
Okay, so it's between ArcelorMittal and Vedanta. New Metal, remember, is out because of unpaid dues. And as Ritu said, it promises to be a long night, but we could perhaps have the highest bidder being announced at some point. Now, barely 4 months after his arrest, the Pune police is set to drop charges against the former managing director and CEO of the Bank of Maharashtra, Ravindra Marathe, over alleged collusion with a real estate company. In court, the police is likely to cite lack of evidence against him. Utkarsh Chaturvedi joins us now with more on the volte-face by the Pune police. Utkarsh, what is the Pune police saying now?
In fact, it was from the beginning when these arrests were made that questions were raised on the same. Within days of the arrest, CM Devendra Fadnavis had said that he will look into these arrests and see if they were genuine or not. Precisely why Ravindra Marathe also was released on bail on 23rd June within 3 days of the arrest, and others on 30th of June. And now, barely 4 months after the arrest of the officials, Pune police may soon have cases against them withdrawn. Now, the EOW wing of the Pune police is all set to file a closure report in their court cases, claiming that they do not have enough evidence against 3 of them. In fact, it was on June 20th this year, Pune police arrested the then MD Ravindra Marathe, ED Rajendra Gupta, former CMD Sushil Manot, and zonal manager Nityanand Deshpande, all accused of colluding with DSK Group and misusing powers to sanction loans. Pune police had then charged them with serious sections like 120B, 420, which is criminal conspiracy and dishonesty. Bank of Maharashtra then had taken all the powers away of the board from the MD and ED pending investigations. Now, Pune police has already approached court on October 17th, and the Shivaji Nagar court has asked them to submit this plea on October 20th. 4 arrested of this, Pune police will file prosecution case against only the zonal manager Nityanand Deshpande, but will drop charges against the rest 3 bank officials. It's not only this case, but in many other cases by investigative agencies, top bankers are on the radar, and this might just impact the credibility of these agencies investigating top bank officials, because remember that out of the many accused, it's only in the case of the ex-PNB MD Usha Anand Subramaniam that investigative agencies have been able to lay down any concrete charges.
Well, a volte-face there by the Pune police dropping charges, or all set to drop charges against the former managing director and CEO of Bank of Maharashtra. Utkarsh, appreciate you joining us with that. Now, 6 months ago, on the 27th of April, technology firm Vakrangee informed exchanges that PricewaterhouseCoopers had resigned as the auditor of the company. PwC had later cited irregularities in the company's accounts. The stock has fallen by over 70% since then. But none of the stakeholders have raised any red flags or even questioned the promoters over PwC's exit. CNBC TV 18 Sonal Sachdev and Jyotindra Dubey have been studying Vakrangee's stupendous growth and where it's coming from. Let's go across to Sonal now for more. Sonal, explain to us what's been going on at Vakrangee.
Yes, we've been taking a look at this, me along with Jyotindra Dubey, our colleague, at Vakrangee, and we've learned from sources that a significant portion or a majority of their revenues come from trading in gold. This is not one of the reported segments. Pricewaterhouse, which was the earlier auditor, had indicated in its resignation letter that there were dealings in gold and jewelry, and they had questioned the management about it, but the management failed to provide satisfactory answers, which is why PwC decided to step down. I'll quote from the PwC statement. They said that these financial statements as a whole are free from material misstatement is something the auditors need to claim, and they were not able to state whether the statements were free from fraud or error, and that they presented a true picture. Now, some of the numbers that raised a red flag: stupendous growth in revenues to about 5,800 crore from about 2,500 crore year on year. 10,000 kendras added in just 1 year. Vakrangee kendras, the major source of income 10,000 kendras added in a year. And if you try and use the numbers that the company has indicated, a franchisee, a gold franchisee of Vakrangee targets a revenue of 2 lakh a month. If we add that up, 10,000 kendras, 2 lakh a month, 2,400 crore a year. That's still about 1,000 crore short of what the company has achieved. What's also interesting is that the working capital numbers don't seem to make sense given the companies in the services business. About 74 to 75 days of receivables, just 20 days of payables. Also, material purchases extremely high and disproportionate for a company that seems to be doing e-commerce activity in alliance with players like Amazon. This raises some big questions. One is A, why was the dealing in gold not disclosed? B, is trading in gold mentioned in the memorandum of association of the company? And C, LIC is a stakeholder and they have a nominee on the board. Why didn't LIC raise any questions about this? We are waiting responses from the company, the new auditor, as well as LIC.
Well, the unanswered questions remain. Sonal and Jyotindra, appreciate you joining us with that CNBC TV 18 investigation. Crude prices have inched up today. Brent crude is now trading just shy of $80 a barrel, while NYMEX is inching closer to $69 a barrel. Back home, fuel prices have been cut for the second consecutive day. In Delhi and Mumbai, petrol prices have been cut by 24 paise to 82.38 and 87.84 rupees per litre respectively. Diesel in the two cities has seen a cut of about 10 paise and 11 paise each. International Finance Corporation has launched masala bonds worth $1 billion to fund its expanding investments in India. The first tranche of the scheme, worth $100 million, opened last night at the London Stock Exchange. The bonds were sold to a range of investors, including asset managers, banks and a pension fund. GMR-operated Hyderabad Airport is all set to commence operations from its new interim international terminal by 23rd of December. The move will facilitate the second phase of expansion of the airport. According to sources, GMR will invest over 2,600 crore rupees towards the expansion. Up to 80% of this funding will be through debt and the remaining through internal accruals. China's economic growth has fallen to 6.5% in the third quarter. This is its weakest performance since the 2009 financial crisis. The lower-than-expected growth has raised concerns among investors. However, a strong assurance from the government has provided the much-needed relief to stock markets. Facebook has hired former UK Deputy Prime Minister Nick Clegg as its head of global affairs and communications. Remember, this comes at a time when Facebook is facing political pressure over issues like data protection and fake news. Air quality in the national capital remains at alarming levels. This despite some showers today which could not offer much respite. Delhi's Chief Minister Arvind Kejriwal slammed neighbouring states and the centre over stubble burning. Taking to Twitter, Kejriwal said, and I quote, "Very sad that Central Punjab and Haryana governments did absolutely nothing for farmers. As a result, the farmers will suffer on one hand and Delhi will become a gas chamber soon." End of quote. Punjab's Chief Minister Amritsar Singh hit back at Kejriwal.
It's not the blame game that we are playing, but I'm just saying everyone has to contribute towards this. And instead of saying Kejriwal tweets, you're doing nothing in Punjab, and I tweet something else, and somebody else tweets something, they're not going to solve the problem.
Harshvardhan, when he spoke to Network 18 a few days ago, he did mention this. He said the centre has done its bit, the centre has given the funds. The onus is certainly on the states right now, to do their bit.
Well, we've done our bit. What more can we do? Do you know I've got 17 lakh farmers, out of which 10,25,000 are below 5 acres. That's where the suicides are taking place. If they can't feed their children and they're committing suicide, I'm going to tell them to spend another 3,000 rupees on doing something else. How can they do it? So it's not possible.
While the war of words continues, meanwhile, Delhi air is getting worse. Over 50 people are feared dead in a train accident near Amritsar. Initial reports suggest that people were run over by a train after the crowd spilled onto the railway tracks while watching the burning of a Ravan effigy. The train was coming from Jalandhar to Amritsar. Let's listen in.
Crowds बहुत ज़्यादा थे. Suddenly कुछ हुआ है movement और उसमें रेलवे ट्रेन जो उस समय क्रॉस की है उसकी वजह से there are a lot of casualties, more than 50 at the 40 to 50. अभी assessment चल रही है. We have taken people to hospital. We are evacuating people. It will take some more time. I'll give you details later.
इस जगह पे मैं पिछले कई सालों से दशहरा करता आया हूँ। रेलवे को रिक्वेस्ट की जाती है कि रेल इधर से धीरे आए, जहाँ लोगों को थोड़ी देर के लिए उसको रोका जाए। बार बार इधर हम लोगों को इन्फॉर्म करते, हमारी सिक्योरिटी प्राइवेट और पुलिस लगी होती है कि लोगों को पीछे करने के लिए। आज ये मंजर देख के ऐसा लगता है, हमने तो फिल्मों में देखा था और सुना था, इतनी उम्र नहीं है, कि 1947 में ऐसा मंजर था, किसी की बाजू इधर पड़ी है, किसी का शरीर इधर पड़ा है।
Well, tragedy strikes there in Amritsar. We'll be updating you on the details, but a horrific accident there in Amritsar as the Dussehra celebrations were underway. With that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Don't go anywhere. There's a lot more coming up.